Good evening. My name is Jorge Gonzalez and this is for the class CIS 3198-90L. My executive summary report will be on BBVA Compass. BBVA Compass, a trade name of Compass Bank, is a subsidiary of BBVA Compass Bancshares Inc., a wholly owned subsidiary of BBVA. BBVA is a financial service group with more than $740 billion in total assets, 47 million clients, 7,400 branches, and approximately 107,000 employees in more than 30 countries. BBVA ranks among the top 20 largest financial institutions in the world based on the market capitalization and 21st in Global Finance magazine list of world's 50 safest banks for 2010. BBVA provides its customers around the world with full range of financial services, including commercial and wholesale banking, retail banking services, consumer loans, mortgages, credit cards, security brokerage, health management, pension plan management, and insurance. The BBVA Group maintains a leadership position in Spain, Mexico, Latin America, and the U.S. Sunbelt region, as well as operations in China, France, Germany, Hong Kong, Italy, Japan, Singapore, Switzerland, Turkey, and the United Kingdom. BBVA Compass is a leading U.S. bank franchise located in the Sunbelt region. BBVA Compass is the 18th largest U.S. commercial bank and deposit market shares and ranks as its third largest bank in Alabama, fourth largest bank in Texas, and fifth largest bank in Arizona. Headquarters in Birmingham, Alabama, it operates a total of 715 branches, 92 in Alabama, 77 in Arizona, 65 in California, 36 in Colorado, 45 in Florida, 20 in New Mexico, and 380 in Texas. BBVA Compass employs 11,871 people and provides financial services to more than 1.4 million households. In February of 2010, BBVA Compass completed the conversion and rebranding of 144 former Guarantee Bank branches in California and Texas. Throughout three major business units, commercial banking, retail banking, and wealth management, BBVA Compass offers customers innovative, industrial-leading products and services that provide financial solutions to meet their needs. Examples include commercial and wholesale banking, treasury management, small business administration loans, international services, merchant processing, retail banking services, consumer loans, mortgages, home equity lines and loans, credit cards, personalized Visa check cards, security brokerage, mutual funds and annuities, financial counseling, wealth management, pension plan management, and insurance. BBVA Compass Bancshares Inc., a Sunbelt-based bank holding company, BBVA Compass, reports a net income attributable to shareholders of $364 million for the first 9 months of 2014, a 4% increase compared to $349 million for the first 9 months of 2013. Return on average assets and return on average tangible equities for the first 9 months of 2014 were 0.65% and 7.41% respectively. Net income attributable and shareholders for the third quarter of 2014 was $143 million, a 29% increase from the $111 million earned during the first quarter of 2013. Return on average assets and return on average tangible equities for the third quarter of 2014 were 0.73% and 8.48% respectively. Total shareholders' equity ended the third quarter of 2014 at $11.9 billion, a 4% increase from third quarter of 2013 levels. During the quarter, BBVA Compass also further enhanced its liquidity position and diversified its funding base by issuing $1 billion of senior bank notes. The offerings included $400 million of 3 years, 1.8750% unsecured senior notes and 600 of 5 years 2.750% unsecured senior notes. This marked the bank's first debt offering in 7 years, with orders peaking at $2.5 billion during the offering period. Average tangible equity is a non-GAAP financial measure that we believe aids in understanding certain areas of performance. The calculations of this measure is included in the title page, Non-GAAP Reconciliations. BBVA Compass Branchers Inc. reports first quarter of 2015 earnings of $141 million. First quarter earnings increased 23% from prior year levels. Total loan end the quarters at $58.8 billion, up 11% from prior year levels. Total deposits increased 10% to $62.9 billion, driven by a percent increase in low-cost interest-bearing accounts and a 14% increase in non-interest-bearing deposits. Total revenue increases 4%, fueled by increase in both non-interest income and in net interest income. Expense growth well contained at 1%. Net charges-off ratio dips to 17 basis points. Non-performing assets ratio at 77 basis points, and coverage ratio remains healthy at 156%. They reported net income attributes of shareholders of $141 million for the first quarter of 2015, a 23% increase compared to $114 million ended during the first quarter of 2014. Return on average assets and return on average tangible equity for the first 3 months of 2015 were 0.68% and 6.25% respectively. While total deposits increased 10%, growth of low-cost deposits was even more pronounced, and savings money market deposits grew 17%, and non-interest-bearing deposits increased 14%. Credit quality metrics continue to reflect a strong risk profile. Net charge-offs as a percent of average loan dipped to 17 basis points compared to 24 basis points in the year-ago quarter. Non-performing assets as a percentage of loans, other real estate, and other repossessed assets were 77 basis points compared to 95 basis points a year ago. Total shareholders' equity level ended the first quarter of 2015 at $12.2 billion, a 4% increase from $11.7 billion at the end of the first quarter of 2014. Additionally, each of the company's regulatory capital ratios remain significantly above well-capitalized guidelines. Credit quality metrics continue to reflect a strong risk profile. Net charge-offs as a percent of average loans dipped to 17 basis points compared to 24 basis points in the year-ago quarter. Non-performing assets as a percent of loans, other real estate, and other repossessed assets were 77 basis points compared to 95 basis points a year ago. Total shareholders' equity ended in the first quarter of 2015 at $12.2 billion, a 4% increase from $11.7 billion at the end of first quarter of 2014. Additionally, each of the company's regulatory capital ratios remain significantly above well-capitalized guidelines. Thank you for watching this video, and I hope you enjoyed it and it was informative for you.